Hello, I do welcome you back, and in today's video we're going to be looking at those technical indicators that you need if you want to be a profitable trader. In other words, we're going to be looking at the technical indicators that can make you a profitable forex trader. Now, in today's video, I'm not going to be wasting any time, and we're going to go strictly back to those specific technical indicators that you basically need to know. Well, in this video, I'm going to release one. We shall look at the trend indicators. Which are those specific trend indicators do you need to know? Which are those specific indicators do you have to use? Which ones in particular? And we're going to be looking at individual trend indicators that you have to literally supposed to look at when you are trading in case you need to be a profitable forex trader. Secondly, I'll also look at the volatility indicators. Which ones are those? What's their main importance? Which ones are the most relevant, effective indicators to use, and on which instruments are they more effective and relevant when trading those? Then lastly, we shall look at the momentum indicators. In bracket, I call them oscillators. Which ones are they in particular, and what are those specific ones? Should we focus on? Should I focus on when you need to be profitable at the end of the day? My name is Isma as usual, and possibly I'll start with the trend indicators. Now, there are a couple of trend indicators, and in this video I'm going to talk about a few of these that are most effective that anyone trading forex that shouldn't miss out when they are trading in their due course of developing particular individual strategies, systems when they are trading, and those that you shouldn't miss out when you are trading forex. Now, when we come to our chart, as you can critically see, we're going to first and foremost, I think the first indicator that I should probably first talk about is called the Ichimoku Kinko indicator, which is a trend indicator. Now, the importance of a trend indicator, one, is to show us the structure of the market that is trending. Now, these ones help you to show you the direction of the trend. And knowing the direction of the trend helps you to determine particular entries, help you to determine the structure of the market, help you to determine which is the impulse, which is the retracement, which are the higher highs, which are the higher lows, which are lower lows, which ones are lower highs. So by this, you're determining, or it helps you in one way or the other to determine particular entries. Now you'll be like, yes, according to this point where currently the market is, that is probably the end of the retracement, the pullback, the correction, and therefore it's the beginning of the new, which is probably at some point the support level or the resistance level, and a lot more about they indicate the trend. So knowing the trend of the market is very, very important, because we all know the market is actually structured with an uptrend, a downtrend, and then the sideways market movement, which is probably made up of the up and the down moving trends. So among the indicators that can help us determine the trend of the market is the Ichimoku Kinko indicator, and this multiple aspect indicator helps us to identify the momentum, the trend. Like I've told you, it helps us show us the support, the resistance levels, the entry plus the exit levels. So to get it onto your chart is just very easy. Just come onto this point which we call the indicators list, go under trend, and you will possibly be seeing it under this. So you take the default settings, and basically this is how it is. And as you can critically see, this helps us probably, let me first freeze this. So as you can critically see onto our chart, we're in position to identify. So as you can critically see onto our chart, this green line shows us where the market was going, and this point where the green line crossed the cloud was probably signifying or signaling to us that the market was going up. And then it makes it important. It makes it easier for us to spot that this is a new trend, and the type of trend that we are experiencing at the moment is an upward directional move. So hence, taking an advantage there, of course, to profit by you going in for a long. We again see the same happening at the very point where you can critically see here. Still, it showed us an upward move, downward, upward, which is of course very easier. It's a matter of you mastering the principal lines that actually make up this multiple aspect indicator, that is the Tekinsen or the Takensen, the Kijunsen, that is the Chukuspan A, Chukuspan B, and the Chukuspan. Okay, so I'll also make sure that I create a new video about this. But then if you probably haven't watched it, there is the one that I created that probably just gives us an introduction to the Ichimoku Kohio indicator, which is up here. But again, I'll also be creating one in details. In case you need it, please don't forget to comment down in the comments in case you need any that I probably, if I see the demand is high, then I'll be in position also to create one. So the reason as to why I most preferably recommend this multiple aspect indicator, it's because one, it actually help us show the beginning of a long-term trend, because most of the indicators, all they show to us are relatively short-term trends. But then this gives us a long-term directed up or downward trend, just as you can critically see onto the chart. So these that I've probably just seen are relatively smaller trends, or relatively small because of probably this market was not with much strength. But however, when you critically see here, when I slightly go behind and see at the cross of this cloud showed us the beginning of this new trend, and hence it was our point now for us to determine how to enter this particular trend. And all you can see is that this market moved all the way from there up to some point here, which is some good number of pips yield by this multiple aspect indicator. And if we actually decide to come and decide to measure the number of pips that are there, you realize that there are a couple of really, really good number of pips that can probably be shown, which is basically something like 500 pips, which are relatively a few indicators that can probably show to you this number of pips, and hence this becoming the number one trend indicator that you can probably use when you are trading. So another trend indicator that I can provide to you is basically the moving average. So for those that probably know the moving average, as I remove, or as I remove as I keep rubbing this, these moving averages are also another trend indicators, and the most frequently ones used I would recommend is actually a 2 period moving average indicator that can either be a simple or an exponential moving average. So you need to know which pair or which indicator, or rather which moving average in particular are you using. So are you using the simple moving averages, are you using the exponential, the weighted, and all that, or you're basically still as well using one moving average, or using 2 or 3 moving averages. So we actually also tend to use those because they help us in one way or the other by actually showing us the direction of the trend, okay, which is moving average. So for this case, I'm going to select the period of 200, and of course you always need to make sure that you put in the right period of what you definitely want to put onto this, or while you're using this this indicator. So as you can see, it works as a support. Let me reduce here such that you see all along this, the way this trend has been moving, because far as at some point here it came, it showed an entry. You see here it showed that now this moving average line was working as a resistance because it was slightly above the current candles, and then as it broke this point here, it showed us the beginning of a new trend, because this moving average, which is the red line here, started probably going below the current candles, and hence making, as you can critically see, started, being below these candles, and this means that if it is below these candles, it works as a support and therefore shows us the trend is in an upward direction. So we're in position to probably making our priority orders to be buy orders because of the structure of the market and because of the direction of the trend, which is can easily be shown to us by the moving average, and hence making the moving average to be the second number one trend indicator that we can use when we are trading in case we need to be profitable at all levels of trading. That is either you're new into trading, or you're new you're new into trading, or you've been trading experienced and all that. Then I also look at another indicator that is probably drafted by you. You will not get it anywhere, which is the trend line. Trend lines can also be used to identify the direction of the trend. Remember, when the market is trending upwards, it usually has a support, and then this support can probably be a moving average line. It can be, a support line, or it can be a trend line, which trend line is working as a support at that level that actually connects a couple of higher lows on different levels. Like for instance, when you look here, this is generally an uptrend. Now, if this is an uptrend, we can choose to actually draft a trend line, and this is the trend line. You just click onto this trending line, and then when you click onto that trend line, you determine the points that you probably think this line is going to touch. And for this case, I'm considering those points to be considered as my this is considered to be as higher low. Then this is an higher low. This is an higher low. This is an higher low, and this is an higher low. So this trend line that I've just drafted now at this very moment works as a support level, and therefore whenever market approximates to this line, I'm expected to buy or make a long position, because now this line or the kind of nature of this trend is upward, and I'm being in position to determine to which direction this market is going is by basically using what we call as the trend line. So trend line is also another technical trend indicator someone should use when they are probably identifying a particular trend on the market. So after looking at that, lastly, I'll look at the ADX. ADX stands for Average Directional Index, and it can also be gotten from the indicators list. Okay, from the indicators list under the trend, which is the Average Directional Movement Index. So we leave the default settings, and then this basically shows us the momentum, shows us the strength. So if probably we're experiencing, just like as you can see, it is basically that blue line that you can critically see at the bottom of our chart. So this determines whether the market is trending upwards or downwards. We do not consider, or we don't take it as directly intercepted as we do to the same with the other indicators, by basically looking at the increment in size defines the direction of the market, which isn't the case here. So here, the increment in size determines the strength that can either be appropriately for the buyers or for the sellers. So also in the case whereby you see it going up, but the trend going down, means that that market is trending downwards, and therefore you're experiencing a couple of different strong buyers or sellers in that appropriate direction, which makes it the other trend indicator that is most effective, most influential if it actually comes to a point of you identifying the direction of or the trend of the market. So I will consider only those for specifically looking identifying the trend or as trend indicators. And secondly, now I'll go on to volatility indicators. Now, volatility indicators. Now, basically, this means by volatility, I can probably explain to you what volatility means. Volatility means that high. Okay, we're considering the volume in the market and the size of a particular candle. So we're considering the volume, which volume is being either led by the volume, or rather that movement, sharp movement can either be led by the volume of buyers in the markets, or buyers or sellers in the market, or it can be led by the amount of money the buyers or the sellers come with in the market. So such an example is what we can probably be seeing here, where we literally get to have such big candles. Okay, so when you have such big candles, it means that now you're experiencing what we call volatility. Now, here, when it comes to volatility, some of the pairs are more volatile than the other. For example, when you look at the GBP, that is the Great Britain pound and the US dollar. So mostly the GBP or the pound are having high volatility, because all we know that is pound is United Kingdom London is the capital of Forex, where we see a couple of different buyers and sellers participating in the market with lots of volume and also in big numbers, hence making it, of course, one of, as I'm picking it, one of the highly volatile currency pairs. So it's also very important for you to know the type, the pair that you're trading, okay, to determine the volatility in the market, because more volatility means more number of pips, and hence, of course, not delaying into the market, because the markets now are moving appropriately in the direction that you're moving, rather you're trading and all that. So for that case scenario, for us to determine the volatility of the market, that can be determined by the Bollinger Bands. Okay, Bollinger Bands, as I remove these Bollinger Bands, have actually show us the movement of the market in the bands. Okay, within two bands. As I remove the moving average, you still go to the indicators list. On the indicators list, you go where there is Bollinger Bands, and make sure you leave the default settings. Now, how do these, as I reduce, how do these enable us determine the volatility of a particular market? Okay, like for instance, where the volatility, like for instance here, where the volatility is too high, we'll definitely get to experience such formations as this, or which we call squeeze. Okay, this squeeze that you see, there is a lot of squeeze or narrowing of the bands. Okay, whenever the market is narrowing, like for instance here, then we expect to experience high volatility in a particular market. So whenever you see a squeeze, okay, this signifies that, you know, there's going to be an experience of a particular trend, experience of volatility in that particular trend. So which makes it good and easier for us to determine a particular volatility that is yet to be experienced by, of course, simply the narrowing of the Bollinger Bands, which is, of course, relevant to our trading because it enables us make some good number of pips. Another one is the ATR. The ATR is also another example of a volatility indicator that probably defines the amount of volatility by looking at basically the volumes of people with, or buyers in the markets with, you know, the number of with of course the volumes that they come with, and also their numbers as well, which is also another important, you know, volatility indicator that we can use in our technical analysis. Lastly, I'll look at what we call or refer to as the momentum indicator. Momentum indicator is basically can be referred to as oscillators, which are some point referred to as the leading indicators. Now, these ones I'll basically mention or look at basically the stochastic. The stochastic, we still get it on the same very point. The stochastics also help us to determine the higher highs. That's the overbought and oversold territory, just as we're going to see. So here is the stochastic. I'll make sure that I release individual videos about these multiple technical indicators, and each one in particular with their particular details. But then in this video, we're just looking at the trend, the momentum, and then the volatility indicators that probably any profitable Forex trader who is a technical trader needs for them to be profitable in their trading career. So by us looking at this, what we have called the stochastic, Okay, like I've told you, it works with particular levels. That is the overbought, which is this section, and then the oversold, which is this section. That is the section below 20. That is the section below 20, which is this, and then also the section above 80. So meaning that whenever market approximates to this point and crosses now below 80, this means that you should execute a sell position. And then when it comes all the way from 20, which signifies for you to put a buy point or a buy order. Then we shall also look at the RSI, which is also another strong momentum indicator, and this one relatively can be interpreted as the stochastic. Still, we get it from here, and we go to oscillators and look for RSI. RSI stands for Relative Strength Index. Then also make sure you leave the default settings, and then it will also definitely reflect and of course appear here. So it also works the same way, and it can be interpreted in the same way, only that for it works within ranges of still 100, 0 to 100, but between 3 and 70, still with the same parameters, overbought, oversold, as you can critically see. So over 70, this area can be determined as the overbought, and then this can be determined as of the oversold. Then lastly, I'll talk about another momentum indicator, which can be referred to as the MACD. MACD stands for Moving Average Convergence Divergence. So MACD. So that is the MACD. And then the MACD has some aspect of a histogram, but still also can be interpreted as the same way as the stochastic and the RSI. So as you can critically see it, here it works between the zero line. So when the histogram crosses the zero line, whether from up, then this means that you should buy. From down, then this means that you should probably sell. So we have the MACD line itself is the dotted line, and then the histogram line. So these ones are when, of course, the dotted line crosses the zero line appropriate to the histogram, then it becomes an added confirmation, and it means that you should sell or you should buy appropriately, depending from which side the histogram and the MACD line cross the zero line from. So these are some of these indicators that you need to know if you are trading and you're a technical indicator. Just as I told you at the beginning of this video, the main 3 technical indicators that any person needs to be profitable using technical analysis. And believe you me, if you use this appropriately, consistently, with good risk management, money management, plus your good psychology as well stipulated in your trading system, you'll be in position to, of course, learn something and be profitable at the end of the day. My name is Sewankabo Isma. I have shared my WhatsApp number at the beginning of this video. Please use it to contact me in case of anything here and there that is things to do with learning, private lessons, then issues with accounts rather, issues with signals and here and there that you probably need assistance here and there. Thank you so much. Hope you have learned from this video, and I sign out. Have a lovely good evening, good morning, good afternoon,